Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today. Enjoy more than 60,000 happy investors that save money on every precious metals purchase they make.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz. It's February 14th, 2018. Well, we've seen some major market gyrations over the past week. Remarkable all-time single-day point losses and then gains. Well, where is it going to go? Well, where you should go is send me an email, kl@kerrylutz.com. We love getting them. Love for you to be part of the show. And, well, without further ado, Andrew Zatlin is here, Moneyball Economics. Andrew, welcome back.
I always love being here. You are awesome, and your audience is awesome.
Well, thanks. And so what about that market?
What, did something happen?
I don't know. Nothing really. It's down a little.
Well, I put context in here, right? You know, we've been plugging along in 2016, 17, you know, about 2-3% growth in the S&P 500 every quarter, you know, 2-3%. Then all of a sudden we get to January and we race up in 1 month. In 1 month, Gary, we go up, 7, almost 8% in 1 month. So it got way overblown. I think what we're looking at is kind of a mean reversion. And so instead of looking at the collapse as anything more than I think it's just a blow off. We needed it. I mean, it was just out of control. Having said that, then the question is, you know, where are we? Are we in line with the underlying economics?
Yeah.
I think today we're a little ahead still. I think that you've got everyone re-entering. You know, it's kind of like the lifeguard has blown the whistle. Everyone got out of the pool. Okay, time to get back in the pool, and everyone's jumping in with both feet. So the question right now is, what's a fair value for this market based on all the various spinning plates? My take is 2650 for the S&P 500 reflects the underlying economic growth that we have. And we're above that today. We're at 2700-ish. So we're about 1 or 2 points above where I think it's a good value. I don't think there's a lot of upside for the rest of the quarter. Yeah, but again, what you're seeing is that irrational exuberance. Oh, whatever the problem was, it's gone. Now we can jump back in. You see it in Bitcoin. What is that thing up 8%?
It's to 92,300. Yeah,
back above that Fibonacci retracement, and so it's as if nothing happened. So was that an episode of buy the dip? Is that an omen of more to come? I think we just saw what happens when, and let me can I get into the mechanics of some things?
Yeah, fascinating sure. By all means.
And this isn't something that I was familiar with until I started working with a lot of folks on Wall Street. But I didn't realize this, but some of the bigger players out there are these pension funds. And even if they're not a pension fund, you've got a BlackRock, $1 trillion. A lot of these funds have an equity bond portfolio, and they've got to maintain the valuation. It might mean, hey, 50% in bonds, 50% in the equity market. So you get to a January, everything got thrown off kilter where you've got this surge in the value of their portfolios holdings of equities. And they have to sell equities in order to maintain that parity that they've defined as what they invest in. And so that created all the selling pressure. Now it reversed as of last week. All of a sudden, the market's down, 8-9% from its peak. So that selling pressure goes away. And all of a sudden, it's back into a buying pressure. So I think you're seeing that zigzag. These things exaggerate a lot of the movement. We don't see it as retail investors. But this is how the big boys are operating. They have rules.
Yeah. So is this the end of the beginning or the beginning of the end?
I think there's a guess right now going forward. And the guess is based on what the Fed and what everyone else is thinking at the fund level. It's this. No, the economy is not doing as well as people think. Yes, there are a lot of headwinds. We've got inflation rearing up. We've got interest rates going up again, and everybody knows that these are all things that will slow the economy down and create pressure. It'll create pressure on margins. It'll create pressure everywhere. So that's the tailwinds, but there's this one massive headwind that everyone's thinking, and they're thinking at the same time, if the economy, in terms of hiring, if the household income can rise faster than these pressures are rising, then it's more than a wash. It's fine. We can have some inflation if the wages are rising even faster.
All right.
We can have this inflation if the spending's going even faster.
So,
and the calculus says, yeah, that's what we expect.
So let's look at the main driving force for business investment, business raising wages of their slovenly employees, and that is the tax bill, which had all sorts of unintended consequences on the upside, right? Is it going to keep up that way? I mean, you got millions of people getting bonuses, 1,000 to 5,000.
I'm going to reel you back there. Unintended? Oh, well, you don't think releasing a tax cut announcement as we head into the Christmas holiday season was
well, unintended in terms of nobody expected all of these companies to jump on the bandwagon to give out bonuses and to raise wages as quickly as they did. That wasn't expected here. Yeah, hoped for, but nobody really knew. Most people believed, brilliant economists that you and I deal with, that what was going to happen, Andrew, was that they were just going to buy back shares and there wouldn't be a trickle down, if you will. So maybe it was intended, but it was not expected by many.
Was it surprising? I don't think it was surprising. I actually expected some of this, and I expected some of it. Let's be honest. There is a tight labor market, and there are different ways in which you can attract workers. It's harder and harder for companies making the amount of profits they're making to not share it. And it's easier and more controlled in the form of a bonus than it is in a raise. Also, this wasn't done in the goodness of their hearts. There are also probably some wonderful tax benefits to doing it in last month, the month before, whatever. They're not just doing it because by gosh they can do it. They're doing it because there's probably a sweet little difference in if they do it last year versus this year.
Oh, for sure, because their tax rate is higher last year, so that's a totally legitimate deduction, employee bonuses. So you shift the expense to 2017 where your rate is 35%, and then you're not going to show it this year as an expense, so your profits will go up and you'll pay less taxes. So yeah, obviously.
Everyone wins as far as and I'll throw one more thing out here I'd love to share. I these things don't happen in vacuums. Bernie Marcus, the guy in charge of Home Depot, he's been a very loud, vocal Trump supporter. And Home Depot is one of the ones that led with a bonus. Hey, I have a sneaky suspicion that it's not sneaky. I guarantee you that folks from the Trump administration put out feelers and meet regularly with these business titans, and they do feelers. Hey, if we do this, what would you do? And a lot of them said, share. I think we heard, share buybacks would be a focal point. And I'm sure a lot of them also fed back, you know what? I might share it. Not all my employees are in the stock market, so I'll share it with them in a different way. But point being, I think there's a lot of support from the business community for Trump, and this is a way to show it. You can donate to the Republican committee, or basically you can have your employees support what's going on by giving them some of the money. And this is a problem for the Democrats going forward. They have, they're playing catch up. They don't understand the degree to which this is, vote buying, lowercase v, lowercase b. But this is the way it works. You put money in people's pockets. Oh, they want that guy in charge to continue to be in charge. And if you're a business and you've got a guy in charge who's making changes that are favorable to you, you want him to be in charge. And hopefully you've got, I happen to know Bernie Marcus's record, and he's a very thoughtful individual. He's not someone out there trying to steal every dime. He's a guy who wants to share with his employees. He built Home Depot. He looks out for his employees. And here's a guy who had an opportunity to sort of feel that what was going on under Obama was not good for employees. And now he has stated publicly for some time what Trump is doing, what Trump wants to do is good for employees. And I think you're kind of seeing, I would say basically, you're seeing business in America saying, we like Trump, we like his policies. We may not like him, but we like his policies. And they're putting money where their mouth is.
Yeah. Well,
and you're going to see more of that this year.
AT&T was the one that kicked it off. All right. And AT&T just happens to be attempting to acquire Time Warner. And they're not liked by the Trump administration. To put it charitably, Time Warner owns CNN, and basically the Trump administration told AT&T, hey, go ahead with that acquisition, but you can't have CNN. You got to shed it. And basically they're in court now. So if they're trying to curry favor with the Trump administration, what better way? And they kicked it off. They were the first to do it. $1,000 bonuses, all these other things. They were one of the biggest beneficiaries of the tax cut, saving some $2 to $2.5 billion a year because they were at a virtually full tax rate. So, there's other things afoot here. I don't think anybody expected, Andrew, millions of people to get these bonuses. I don't think anyone expected greeters to get their minimum pay up, their greeters at Walmart, from $9 an hour to 11. No one was really expecting it to the degree that it occurred. Maybe the Trump knew in the back of his mind, or they had a good idea. But the media, it was nowhere to be had in any media, both right, left, center, libertarian. No one expected this. And then the companies reinvesting in the country, bringing operations from overseas. It was hoped.
Marvelous.
It was hoped, but nobody really thought the results would be this quick and this dramatic. And maybe that's why the market really got ahead of itself. I mean, you can't connect necessarily day-to-day events with what the stock market does. There's more at play, but certainly it added to the sense of optimism, Trumphoria, if you will, and a lot of it was there.
Let me bring it back. So we were talking about the market pulling back and some of the mechanical and some of the behavior and some of that optimism that's there. Definitely all the above. The trigger for the pullback was a good trigger, and let's talk about that. That was payrolls. By the way, I was one of the most, I was recently ranked number 2 on Bloomberg for payrolls, and my payroll forecast was very divergent from consensus. I was forecasting up and to the right. I was forecasting wages up. Consensus felt that it was going to be slower. Well, it turns out, no. It came out strongly, just as I had said. I'm not patting myself on the back, but I'm simply saying, it came out strongly. I said it would. My data's good. And what is my data saying right now? My data is saying we've got strength. And the reason the market freaked out at some level, the reason that was the trigger for a pullback was everyone said, if consensus was right, then maybe the Fed rate hike might be under question. Because they're expecting a softer number. Gee, there is no labor tightness. We won't see wage inflation. So without inflation, the Fed doesn't have a reason to raise rates. My data is saying, oh no, we've got a lot of demand and we've got wage inflation here. And as a result, the Fed is going to be more likely, not less likely, to raise rates. Well, that shook the market, right? That basically was a shift in the narrative. Put that aside. Like you said, things change. They twist and turn. The ultimate message that I would love to share with your listeners is that right now there's a lot of optimism that is converting into actual spending. Off on the sides, there are a lot of academic discussions going on. Is this good? Is spending $1 trillion on the infrastructure going into more debt a good thing, a bad thing? What's that going to do to the dollar? Hey, you know what? Right now, the effect is to get more spending going. So if you just take that 1-year view, you have a lot of people stepping up and saying, I now have more money in my paycheck. I'm going to spend it. I like that there is a game plan. I hear from the guy in charge, there's a game plan. And that's, I think, is sort of the underlying message. So people panicked because good news was coming out, and that was shifting the trajectory. They've had a week to sort of absorb it, and whatever kind of mollifications needed to happen in the background, money's back. Let's move forward. And I think over the course of the next couple of months, the focus is going to be on inflation primarily because, are my costs of inputs going up and my margins getting squeezed? And, does that E and the P to E need to be revisited? And if so, are my prices too high? And I think we kind of just went through sort of a preliminary warning shot of if the E gets too high, the P needs to come down, the price needs to drop. And that leads to the sort of the the broad-based sell-off because people get caught out. I don't think this is the last time we're going to see this. I mean, come back again in a month and 2 months, and the steady drumbeat of inflation, and then next month we're going to probably see a rate hike. We have good news, and the idea is the good news outpacing the bad news? And the calculus right now from the street is that, it looks like the good news will outpace the bad news. And so everyone's watching. That good news is going to be defined as continued strength in hiring, continued wage inflation, not off the chart, but just, something that says, wow, the trajectory is shifting up. It's interesting what we were talking about also, Carrie, about the how companies have tried to make sure that they're on the right side of the Trump administration. This isn't the first time. I mean, there's a certain connection, obviously, between big business and government. And whenever you have a new administration, the new administration comes in with an agenda. And Trump's agenda has been and continues to be, how do I bring business back to the U.S.? How do I strengthen business here? How do I boost the economy? And so that's why you're hearing all these companies lining up for that. If I may, let's go back in time 9 years ago when Obama came in, and his big thing was healthcare and diversification.
How do I screw the thing up? How do I screw everybody? I thought that was the meme of his administration, and I think he was pretty successful at it. And it's interesting, Andrew, like we haven't talked about precious metals prices, but as everything else has gotten better, precious metals have been going up. Gold's right at $13.54 now after taking a little bit of a hit last week. Silver getting back to 17. Hey, I want to go back to something we always talk about when you're on, and I don't mean to interrupt. We can go back to what you're saying after, but unemployment, jobless claims, they're down to a 45-year low, and that's meaningful because the lower they go, that means the more people are getting hired, the less people are unemployed, right? I mean,
I thought people are getting more people are getting hired because pot's legal in California. Isn't that what you said? No, different form of hire.
It's worked its magic in Colorado. More pot is being sold in Aspen than alcohol, if you can believe it. So this is a threat. This is a threat to the distillery industry. But
a couple months ago, I warned people, get out of the stocks that are in the alcohol business because it is now demonstrable that people want to Netflix and get high. They are more inclined to stay home and smoke pot than they are to go out and drink.
Yeah.
It's a shift in the way the millennials are playing. But to your point, jobless claim. This is my bugaboo. This is the thing I love the most in terms of all the labor signals out there that are in the conventional space. And what's interesting is, as you noted, not only is it nominally low, I mean, it's low like wouldn't believe, and that's important in and of itself. It's not just that number's lower than it's been in so long. We have more population, more working population. So on a relative basis, this could be just even, since the Depression, the lowest we've seen. Who knows? This is a great number. There's no way around that. Now, the way I like to look at it, though, is to say, but what does it look like versus last year? Because the inflection point always comes when the economy hits that pause button. It's going to show up in jobless claims, and it's going to show up in a very specific way. It's going to say, look, I have the staff I need for the level of business I need. So I'm not really hiring, and I'm not really firing. When you get this year's number of jobless claims to be the same as last year's, that's the message we're getting. Hey, you know what? I'm not firing more people, but I'm not hiring more people like I was last year. Why? Because I've got the same level of business as I had last year, more or less. And we're not there. In fact, we were getting close to that point when we recently pulled away sharply. And again, it's interesting that we pulled away sharply as we got into the January timeframe. And I look at this and I go, this is just great, because it looked like we were going to head at the trajectory as we closed out the year. It looked like we were going to hit that year-over-year level and get close to where we were about the same. We pulled back again, and every time we pulled back, I just marvel. I think there's no way we could go below 230. Boom, 221. Wow, are we going to break 200? Now, I'm going to raise my hand for the benefit of your listeners. We are talking about a level last year, and I'm just going to throw a number out there. In and of itself, it doesn't really mean anything, but it's, again, that year-over-year ratio. Last year, this time, we were in the 250,000 zone of initial claims. As we get to April, it dropped to about 240K initial claims. So we're in February. This time last year, it was 250. 2 months from now, when we get to April, this time last year, it would be in the 240. So it was going down. But it didn't move that much. Once we got to April of last year, jobless claims pretty much stayed around 240K, and that's important. It's important because until recently, we were bumping between 230 and 240K. So we were about to hit that 240K number. Recently, we've been falling down again below 230K. But that 240K number is the one I want everyone to sort of hold in your head. When our weekly jobless claims come out, there's always something, there's a storm or something. As we get closer and closer to April, the storms no longer affect things. We're kind of more in a pure environment of, hey, how am I doing? Is business up? Is it going to be up? And I have a suspicion that we're going to hover between, we're going to be around that 230K level, not above though. And again, if we're up against that 240K level, that's a good thing. That means the economy's still growing. And that's
that's what you're sticking to?
Well, I'm not going to forecast a number and say, by God, we're going to be here. But just the trajectory, the confidence on the earnings calls says we are going to be on a hiring, lean forward posture. I'm going to force the cost up, obviously on boards, or rather onshores production here. It's just amazing. Here's a guy who basically has an industrial plan, and he's whether it's intended or not, going after immigration is another form of boosting labor demand by cutting supply. You're creating wage inflation. There's so many places where he's going that, to me, are positive. The media is never going to like the guy. Yeah, what was it? The other day he came out with something that I said, this is brilliant. He found that we're spending between $50 and $60 billion a year on food stamps.
Yeah.
And the idea originally, I think food stamps are necessary. There's some metrics you can apply. If there are people who need to eat, you give them food. We are a wealthy nation. We can do this. But he's attacking the methodology. I mean, not a week goes by where we don't hear about XYZ store, running a scam on
all the
food
time.
Stamps. All the time, right? And, it's at the margins. It probably adds up to a couple billion. Maybe I'm just going to throw a number out. It's got nothing based in reality. But since I'm always hearing they had this scam in Florida for $20 million. Sorry, I know you're in Florida, Kerry. But, let's say it's a couple billion. It's not the end of the world when you're throwing $60 billion out there, but there's leakage. Could we take that $2 billion and do something with it? Oh, yeah. But it's not the only place where there's leakage. But what I like Trump doing, and this was just basic, he's like, look, I'm giving you a credit card that's pre-filled. You spend it the way you want. And the fact is, this is the fact, half of that money is being spent on soft drinks and candy. That's not food. Okay?
And strip clubs. Don't forget strip clubs.
Well, we're giving tens of billions of dollars to Coca-Cola. Or how about this statistic?
Or Walmart.
18% goes through Walmart. Okay, so this is corporate subsidies, right? That's what it is.
Corporate welfare.
Is it hell? So you got to take a step back and say, look, is the money being spent sizable? Hell yeah. $60 billion. Is that going to the people who need it? Hell no. If you could strip out the Walmarts of the world and at the same time you could force the spending to go to food, you'd probably save upwards of $10 to $20 billion, right? I'm not exaggerating. That's what retail, you take out that retail price.
Yeah.
Boom.
Blue apron for the masses. That's what I say.
That's what it is. And you know what's interesting? The way it was teed up is he's going after poor people. No. He's trying to get more for less. He's a businessman. Why are we paying retailers a retail fee for something that I could drop ship to your door? And the problem is it'll be food, won't it? It won't be candy and soft drinks. Oops. So I'm not saying we do the government cheese kind of nonsense, but I am saying that when you've got someone saying,
well, hey, what's wrong with government cheese? It's some good stuff there.
Makes me sneeze, makes me wheeze. I think you've got a guy at the top. This is one example where he's looking at the way we're spending money and he's being thoughtful. I don't agree with every platform. I mean, nothing for NPR, nothing for the arts.
Great.
I think that there are places where the arts and NPR could spend their money more wisely. I've seen some of the National Endowment stuff. And
like the Obama portraits. What a great investment there.
I don't know. I just sit there, I shake my head and go, it's, if everyone spent money the way I wanted to spend it, we'd never leave Vegas, right? So I can't impose my ways on everyone.
I'd rather spend the money in Vegas than on that kind of stuff that's supposed to be art. But hey, every president gets that, every first lady.
They get to choose, man.
Yeah, choosing let's.
They all choose cheesy though. I got to tell you, the Reagan one looks horrible. It looks like someone.
Most of them don't look good.
They look terrible.
Most of them don't look good.
I don't know. Maybe there's a statement, when they choose. I don't know, but
well, there was one there. I'll tell you that, and it was a weird statement.
I got to be honest with you. I actually liked Obama's. I thought that looked cool. The other one I didn't quite get. I'm not necessarily good with modern art. But
Well,
I didn't quite get it.
Neither was the artist, so you don't have to. You're not alone.
I don't know what that means. I just, it's not my style,
Yeah.
But then I don't go to opera either. It's not my style. So maybe I'm just a cultural, ignoramus. I just, I look at this as over the course of the next year, you've got a guy in top who's signaling new game in town. I'm not putting up with anything. And I would like to put some fundamental thought into an industrial policy, into how we spend money. And that's very different from the prior administration. And so, we have to absorb that. It's a year in, and all of a sudden people realizing, wow, he's really trying to shake things up, and mostly for what I would consider to be the positive from an economic standpoint. And so that's pulling along the spending. And remember, Trump is a huckster, right? Yeah, this guy's a showman from way back. The way he's releasing, the timing of what he's releasing, and the what's of what he's releasing are deliberate. Did he go after the infrastructure plan first? No. He went after a tax cut. Why? He rallied the American people.
Obamacare he went after first here, let's face it.
Oh, he did go after Obamacare. Well, that was one of his campaign promises. But let's go back to that. We're kind of going off topic a little bit. But here's a guy who's also delivering on his promises, or trying to. And I think that's also very different. We're not used to seeing a president get elected and actually delivering what they said. And I think that's also rattling the base. I think it's rattling. I think it's got the base energized, but it's also rattling Washington. They didn't take him seriously, and now they've got to say, wait a second, he really is going to move funding away from this group, or he's going to move funding over to that group. Whoa, I thought we would bog him down just like we bogged down every other president and forced compromise. We're not getting the forced compromise that we expected. Worse, he's focused. He's delivering. I mean, we are 1 year into this presidency. We've had an attack on Obamacare that basically is eviscerated it. We have a tax cut. We have renewed military spending. We have now an infrastructure bill. The pace with which this guy is moving, let's assume that it's also cohesive. Like I said, hey, if you had to start with a lot of these, you start with how you help your tax base, your voters, the Obamacare thing and the tax cut. You've energized in year one all the voters. You're heading now into a midterm cycle. Over the next couple of months, the voters have to choose some of the representatives, and they're sitting there with more money in their pocket. They're not going to get hung up on these academic debates about whether $1 trillion is crazy and that's going to send bonds crash. They don't care. I've got more money to go out and spend. That's what I care about. And I owe it to Trump. And my bosses are telling me I owe it to Trump. Mm-hmm. Okay. And now, as we get closer to the end of the year, you're going to start hearing that rah stuff on the infrastructure bill. Oh, more goodies are coming. So you're going into an election cycle that's going to be heavily tilted towards Trump simply because he's going to be getting more votes that, again, create that cycle of now it's easier to get things through Congress.
Yeah, I gotcha. Well, hey, so market heading higher or lower? Last question in the interview, then we got to take off.
Market's going up, but I think it's going up on inflation. So gold and silver will go up. I think it's going to be hard. I mean, there's going to be some selective sectors you go after, don't go after. I was telling my subscribers, believe it or not, building. I think home building is a hot place to be. And people will think, well, why? Interest rates going up is going to suck some of the air out of that. These guys are lenders too, and now they got to pay more for the lending, and people can't afford blah, blah, blah. Again, affordability. The pace of wage hikes will outpace the pace of interest rates. That's the calculation.
All right. And we're going to leave it there. So, Andrew, just tell us where we find you and how we subscribe.
You want to come too. For the free stuff, MoneyballEconomics.com. For the stock ideas and ETF ideas, themoneyballtrader.com.
All right.
Pays for itself every year.
Okay, and send us emails, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Andrew, thanks so much. We'll talk to you again soon.
Take care, everyone.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.